All right. What is up, tycoons? Super excited for today's video. In today's video, we are going to be covering Tellor TRB. And what we're going to do is we're going to identify how to spot a crash before it happens. Now, no one strategy is guaranteed 100% of the time, but when you're able to, combine signals, right? Combine strategies together, that is truly going to give you an edge. And an edge is what you need when it comes to trading, when it comes to investing. And this video is not financial advice, but what it is it's going to be very informational on how you can use signals, okay, whether it is the Fibonacci's, all right, the MACD, or the relative strength index. In this video particularly, we're going to be combining all three of those things together to give ourselves a competitive edge. Trading is like going to war. It is a battleground, okay? You need to have the proper weapons at your disposal and as many weapons at your disposal as possible to give you the better chance of winning the war that is investing slash trading. So what we're going to do, all right, is we're going to look at those three things and we're going to teach you guys the signals to look for whenever a possible crash is about to come into the market. Now, all three of these things separately are very valid tools that are well respected and used among algorithms and other traders. But once you, again, combine them all together, it's going to give you that competitive advantage that you truly need to be successful. So the first thing I want to highlight is this trend line here, okay? So we are doing a term known as making higher highs. We have a high, a high, a high, a high, right? So clearly this token is in an uptrend making higher highs. If we take a look at our relative strength index down here, we have a high at this point, right? Where we're starting over here, and then we have a lower high. So the relative strength index measures the relative strength of a token at its given price. So if the token is going up in price, the strength of the token should also be increasing. This does not happen 100% of the time. Sometimes you get a divergence. In this case, it's a bearish divergence. So the token is going up and the relative strength index is going down. It's indicated by higher highs and lower highs on the RSI. This is an indicator that we may see bearish activity in the future, right? Now, what we're going to do is we're actually going to zoom in here on our MACD, which is the moving average convergence divergence. Now, that sounds very technical and very complicated, especially to beginners, but don't worry. I'll break it down very simply for you. What you're looking for is this blue line to cross below the orange line, okay? When you get a crossover above the orange line with the blue line, that's bullish. That's a bullish signal, okay? Possibly an entry signal. Now, when you see the blue line cross below the orange line, that is an exit signal. That's very bearish. So if you actually take a look at the moment where we have this bullish, this bearish divergence. If we draw a line directly up from there, we also get a MACD sell signal. So again, what we're doing is combining our signals together to give ourselves a competitive advantage. So not only do we have a bearish divergence indicating possible future bearish activity, we have a MACD sell signal indicating possible future bearish activity. So we've combined two of the strategies together, and we can take a look and see once we got that MACD sell signal and that bearish divergence, okay, the token ended up dropping all the way down 71% and ultimately to the lows all the way over here down 80%. Imagine if you put $10,000 in this portfolio or in your portfolio and did not realize these signals and you were buying the tops up here, okay? So that's the whole purpose of this video, is to inform you on ways to protect the trade and have some proper risk management. Now, this third thing that we're going to learn about is the Fibonacci's, okay? So in this case, if we're in an uptrend and you're in a bull run and you're wondering, what are the main levels that I need to watch for and where should I put my stop loss at? Okay, what we're going to do is take our swing high to our swing lows, right? So if we establish where this trend started, right, it started down here. So we're connecting the low from here up to the most recent high. All right. And if this trend is going to continue, as it's obviously an uptrend, what it's going to do is it's going to uptrend, retrace, and then continue the trend. Okay. That's very simple. But not a lot of people understand that and really grasp the concept itself. So what you want to do is you want to use your fib tool over here, and again, connect the swing low to the swing high up here. All right. And the three levels you want to pay attention to are the 38.2, the 50%, and the 61.8% levels. Now, if we are going to get a healthy retracement, because nothing moves in a straight line, right? Believe it or not, you're never going to see cryptocurrency go up only. It's always at least going to go up and then pull back a little bit, aka retrace, have a healthy retracement, and then continue the trend upwards. Or what it's going to do in this case is it's going to reverse. It's going to break through our retracement levels and start a reversal and a downtrend. So this is a very good example. We're going to have multiple examples of this happening. Specifically, we're going to go back in time in the chart to May and look at when this happened. And we can see that we had all three of our trading, strategies combined together. Okay. So again, look, right here is when we got the bearish divergence and the MACD sell signal. All right, we started dropping. Now, if we would have found support here, here, or here, all right, then that could have been a signal to possibly get back in. And we would have looked to combine the MACD, all right, and the relative strength index for extra confidence and an extra edge in the play to see whether or not we truly were having a retracement and a continuation, or just a reversal and a downtrend. In this case, we never got the MACD to curl back above the orange line. We never got bullish nothing really looked bullish on the relative strength index over here. Okay, we're in oversold territory eventually after we have this big collapse, right? Below 30 on the relative strength index is known as oversold. Below 70 on the relative strength index is what's known as overbought. And typically, a great strategy is not to buy something when it is overbought and not to short something when it is oversold. Now, this doesn't mean something can't continue higher at those given levels, right? Over here, we see the relative strength index is much more overbought than over here. And what happens is we actually create higher highs. But that's an indicator and that's a signal once we see that bearish divergence that, okay, well, the strength of the token dropped, but the price of the token rose. So what we're going to do is we're going to zoom back in time now. All right. And we're also going to cover the 78.6 retracement level, which I like to call the fake out level. Okay. It's a level that fakes out a lot of traders. As I mentioned before, all right, the 38.2, the 50%, and the 61.8% level are the three main levels you want to watch. But in case we do break the 61.8, the 78.6 is a level that really fakes out a lot of traders. So I'll give you guys an example of that, but we're really just going to emphasize the same strategy that we've been using and just show you guys how combining these signals together has always proven successful so far, right? And no strategy is 100% guaranteed every time. But what we're seeing here, all right, if we zoom in here on this initial point right here, this is a perfect example of, a fake out of a reversal, right? So we're connecting our swing low up to our swing high. We have this impulsive move to the upside. We come down, we retrace. Originally, we bounce right here, okay, off of the 61.8%. We get a move higher, but we don't create a higher high. We create a high and then a lower high. This is bearish, right? And what happens as a result is we drop down and look at where we end up finding support before actually creating a new uptrend and making a high and then a higher high, right? Again, it's that 78.6% level. So, you don't want to overcomplicate your charts. I definitely recommend for beginners, focus on the 38.2, the 50, and the 61.8%. But if you've been watching this channel, if you've been watching my videos and you're getting a little bit more experience with this stuff, you can start adding the 78.6 retracement level, because that is a very common fake out level, right? Where, okay, we broke the 61.8, so we should actually come back up, retest it, and then drop lower. But what happens is the bears get faked out and they over aggressively short here and they get trapped. All the bears are getting trapped right here, right? And the liquidity is actually bullish. There's more demand and it pushes the price higher. So the 78.6 is a very good level to watch for. But at yet again, right, what we see here is a MACD sell signal. So we're going to go over the MACD sell signal and show you guys how, one more time, this was a very valid
time to go ahead and cut your losses or take your profits if you're in the trade, right? So we get the sell signal right around here, and we see ultimately it drops down 47%. I know on this chart it doesn't seem like much, right? It only seems like a small drop compared to the rest of everything else. But if this is your portfolio, you're actually seeing a 47% drop. So are you going to be able to actually stomach putting $1,000, $10,000 into a play off of here, because you see it comes up and it bounces off the 61.8, right? So what we're seeing is we come up, we bounce off the 61.8 here, we continue higher. So you're like, okay, well, this is bullish, this is a reversal. You get in at some point in through here, okay, because you're using the strategies we're following. And what happens? You end up dropping 50% plus down to the 78.6% level, right? So that is the reason that we look at the MACD, because you never want to buy something when the MACD is having a bearish crossover and a bearish sell signal, all right? That's not a good sign. If you did get in at this point, you get that MACD crossover and you say, you know what, I'm going to cut my position or put some type of risk management on, whether you're in profit or you're taking or you're cutting a loss. There's always another entry, right? And there's always going to be another trade. And the main focus is to live to see another day. All right. You don't want to blow up your accounts. And so what we're seeing here is just more of so what we're doing is we established a new low right at our 78.6. All right. And then we established a new high up here, after the new high. So what we're seeing is again a impulsive move to the upside, a retracement. We bounce off the 61.8% level, and then we ultimately continue the trend and go up higher. Now, remember, the way the fib retracement works is if you hold these levels, then you're going to get a trend continuation. If you break through these levels, you're going to get a reversal, right? And that's what we see over here is we end up getting a reversal and make new lows. We break the 38.2, the 50%, the 61, and the 78.6% retracement levels. Now, the leading indicator of that is again combining signals together. So what we have here, all right, if we take a close look, everyone, we can see bearish divergence, we can see a MACD sell signal, and we see a break of the major retracement levels, right? So over here, we have our MACD sell signal right here. Okay, so if we draw up on the chart, that's right about this candlestick right here. And coincidentally, that happens to be the very peak, right? And if we take a look, we have a high and a higher high. On our relative strength index down here, we have a high and a lower high. So the relative strength of this token dropped as the price of this token went up, right? Again, that's bearish divergence. We're combining that, right? And so here's the bearish divergence right here, all right? Shortly after, we get the MACD sell signal right here. And what do you know? We see a very, very sharp drop in the price of this token. If we go off the MACD sell signal, all right, it dropped over 75% right there and dropped as low as 78% in the following weeks. All right. So that's the whole purpose of this video is, if you're in um, a bull run, right, and you're wondering, when do I need to sell? When do I need to take those profits, right? Because this is May right here. So May, we hit our peak, and then this catches everyone by surprise, right? So if we look at from the peak to the trough right here, that is an 80% drop, right? If we just zoom over a little bit more, that's an 83% drop. Imagine putting $10,000 in that and it's vanished, and now you have $1,800. You're feeling devastated, right? You're losing all your confidence. You feel like you have no edge in the market and you feel like everything is a scam. So that's the main purpose of this video. We just combined the two tools, the MACD and the relative strength index. We saw two sell signals, right? We saw a MACD sell signal. We saw a bearish divergence, all right? And it ultimately led to an 80% drop in the price of the token, right? And what do you know? What do? We actually break through our 61.8% support level, our 50% support level, and our 38.2 support level. We come down and we completely blow through the fake out level. So we know it's not a fake out. We didn't find any support right here. Okay. We ended up just blowing right through it. And what do? We come back up and retest it, not once, but twice, and ultimately reverse down to the downside. All right. So that's the main purpose of this video. And if you're enjoying this content, make sure to smash the like button and subscribe to the channel. Over here, we have another example, okay? And so what we're doing is, again, we're emphasizing combining signals together, combining these strategies to give us a true market edge when it comes to trading, right? So, let's go over this one more time, guys. We have a high, we have a higher high, we have an uptrend, okay? So the token is going up in price. We look at our relative strength index, we have a high and we have a lower high. We're decreasing in relative strength. This is known as bearish divergence, right? Not only right after the bearish divergence, which is right around here, we get a MACD sell signal and we see the blue line cross below the orange line. So now that's two things on our radar. Okay. And what we're doing is we're saying, okay, well, this is a definite sell signal, right? If you were able to catch any of this run up to the upside, right? And let's just take a look at how big that run up was. All right. That was over 170% rally, right? You have to know when to take profits or protect the trade in these situations. All right. And these are the signals that are really going to help you out in that case. So we just looked at how combining our MACD, our relative strength index, and then what do you know? We come down, we bounce again off the fake out level, the 78.6. We don't hold the 61.8. We don't hold the 50%. We don't hold the 38.2%. We bounce off the 78.6, come up, and we get a perfect rejection right here at our 50% and ultimately continue this reversal in the downtrend. Okay. So hopefully this video made some sense to you. Hopefully you learned something new. If you did, smash the like button, subscribe to the channel, and I do viewer request every single week. So if you enjoyed this video breakdown on Tellor, ticker symbol TRB, all you have to do is comment down below, give me your ticker symbol, and I will be happy to break it down for you and do an update video on it as soon as I can.